Yo guys, welcome back to my YouTube channel, or welcome if you've never been here before. So today I've just jumped on, today 20th of May. So yesterday I got one of the better trades I've had in a while, and it turned this week into a winning week for me, regardless what happens today. So what I'm going to show guys is how I managed to get this trade. In the end, I got about 15R out of it, including partials, but it did go on to peak about 120 pips after a 3 pip stop loss. So guys, what I'm going to show you is how I managed to enter this trade yesterday, and then also how I managed it. Alright guys, so let's get started. So yesterday morning, and I will just take this off now so I can show you guys fresh. Yesterday morning I came to the charts, and what I had marked on was basically, I was looking at this whole area of price on euro dollar, and what I'd found is that we had this break of structure here on the 10 minute, and then we had this break of structure here. So that left behind two bullish order blocks. We've got this bullish order block here. Now, obviously, that one was taken out, but in fairness, there was imbalance there, so we had a reason for it to be taken out. What I also noticed was that we had this bullish order block here. Now, bear in mind, I know it's probably not, doesn't look like the cleanest order block, but the fact is that I wasn't planning to take the trade just based on the fact of this order block. What I did is I've marked out these two order blocks and then basically I'm just monitoring the reactions, so I'm waiting to see what the market gives me. So what I noticed is that once we went into this order block, on the 10 minute, we didn't close below. On the 10 minute, we've wicked back within. So for me, this whole area down here is just a liquidity grab. So at that point, for me, if we broke this high here, I was still potentially open to taking a trade. So what we have for my model, we've got the base point of interest. So it's the 10 minute base POI, which is demand, which is a demand zone. All right. So what we've had is that in London session, after we've dipped into this demand zone, we've actually seen the price start to buy up. So that means that the institutions have started pushing their buy orders into the market. Now, what I noticed, so we had this first break of structure here, which left behind this low. Now, because if you look, there's no imbalance there. So the last actual the last actual demand which caused this first break of structure was in that wick there. Now, for me, again, when it did do the wick, the mitigation wasn't confirmed. But once we saw the second break of structure, for me, that leaves behind this clear confirmation. So at that point, I'm happy to call that a mitigation. Alright, so what that means is that we've now got our invalidation point for the order flow, which is going to be here. So because we got that mitigation there, we've got the invalidation point. So for me, at this point in my mind, we're basically in a full bullish bias. So we're coming away from a demand zone, which is the 10-minute base order block. Now we've got the two consecutive breaks of structure on the 1 minute, and that gives us our confirmation entry. So for me, at this point, I knew that we was looking for buys, fully happy to be entering into a bullish bias. So for my trading plan, we've got the base point of interest, and then now we've had the first break structure and the second break structure. We've also got the mitigation confluence. So for me, what caused this second break of structure very, very clearly was this candle down here. So this is a bullish order block. So within the whole context of this bullish structure, this bullish order block is the next reference point to trade out of. Alright, so what I did initially, I was looking on the 5 second at the time as price got into this one minute order block, but I didn't see an entry, but I was happy to execute on because we broke structure multiple times on the 5 seconds and we left without an entry. So for me, I wasn't happy to execute still at this point. So what I did, I went up to the 15 second to identify the structure on the 15 second. So you know, for me, this is a clear order block to buy away from. So I'm happy to enter into buys away from here, and I'm expecting price to break structure again. But you know, based on the 10-minute being the base time frame, my overall target was that price is going to be getting up to this high here. So for me, I'm looking for buys out of this area here, which is based on the 1 minute. Looking at, so once we've retraced into here, we've now mitigated the 1 minute. So at this point, we're cleared to look for buys again. Like I said, the 5 second didn't give the opportunity, so I went to the 15 second. Now on the 15 second, after we've tapped into here, we've had this big impulsive leg, and what that left behind for me was this whole area down here to then look to buy away from. So at this point, I was just basically looking to buy away from this area here. So we've got our 1 minute confirmation, entry, POI, and then now we've got the 15 second double confirmation POI. So at this point, really, I could have just entered out of here using this stop loss here. So, but at the time, I didn't feel super comfortable with it, just because I felt like after that impulsive move, if we did retrace down, we potentially wouldn't actually see this area respected. So at the time, I still didn't feel fully comfortable to enter with a limit order using the 15 second like that. So what I plan to do is basically, sorry guys, my bad spelling. So what I plan to do is once we got into this 15 second area, which is what I'm suggesting is a continuation of the demand coming away from the demand number 1 minute, which caused this, I would go on to the 5 second and then look for bullish structure to enter on the 5 second. So that is exactly what I did. So I watched it, and what we can see is after it's tapped into here, it's caused this clear push up, and what we've got there is a 5 second break structure. So that 5 second break of structure originated from here. So at this point, I was looking to essentially enter into a buy. Still, I wasn't super happy to just enter straight off there. So what I wanted to see was price would basically come back into here, come up, and then we'll get an entry like that. So let's see what happens here. So price taps back into it. Now, for me, I was happy when price tapped back into it. So yeah, sorry guys. So price taps back into it. For me, I was waiting for that next break of structure to come. So what we had here is we've got the next break of structure there. So at this point, we have now basically the double confirmation. So we know that the institutional demand is here. And then we've had that 5 second bullish structure created. And we've got this clear order block holding the price up. So for me, what I was looking at is entering out of this area down here, and then I wanted my stop loss below there. And for me, I was happy to take this on a free pip. I didn't want to get too greedy with the exact invalidation point, just because, you know, it's easy for price to just dip back below, especially when you've got this imbalance down here. So basically what happened, once I seen price dip into there, I clicked a manual execution, free pip stop loss, and then that was it. I just let the price play out. So again, guys, what this is based on is we've got the 10-minute overall, the 10-minute demand. So once we've reacted off there, we know that price is going bullish in theory. Following that, what we've got is 1 minute bullish structure, so one break structure, and then another break structure. Now, within this bullish structure, after the second break, we've got this impulsive leg here. So our reference points of where to buy, we're basically looking to buy following this range here, this 1 minute range. So the reference point to buy from is this 1 minute order block down here, which is the institutional demand on the 1 minute, following away from this high time frame demand. All right, so then once we tap into here, what we're anticipating is that the bullish order flow, the bullish structure is going to start happening. So once we tapped into there, we had the start of the bullish order flow, and that was kicked off by this 15-second impulsive move here. Then we've seen the retrace to mitigate the 15-second order block. Now, following that, I was very confident with the bullish bias. I was super happy to buy, but it was just about looking for somewhere to put the stop loss. On the 5-second, we got this order block which presented. That was then mitigated, and then we seen that next break of structure. So for me, that was a really nice place to have my stop loss, and just because we were on the 5-second, I did leave a little bit of room in case there was a liquidity grab below it. But the way I was seeing it is that we had our strong level there. So we've got our strong low there, and then this area here was mitigation of this order block here. So at this point, we know that we're in a fully bullish bias. Since we've mitigated there and we've got this order block holding up the price, for me, when I entered there was no reason as such why price had to go back down here. It was fully valid now for price to just continue to initially break the 1-minute structure, which will just complete this range. But then also eventually I was anticipating that we were going to break this 10-minute structure, and that was my first major target. So what actually happened in the end? Well, we started moving upwards. We broke the 1-minute range. Now at this point, I did move to break even. So my break even was set there after we broke the 1-minute structure so impulsively. And then what we saw was continuation. Now what we did actually get was quite a significant retrace, and it did actually almost stop me out, but I did manage to stay in. But it did almost hit me for break even, but I did manage to stay in, and then price just kept on going, kept on going. So what I did is I took my 60% off at 10R, so I took my first partials at 10R, and then I took second partials as price went up, and then eventually, all right, so let's look for 10R one sec, guys. So look, this is roughly 10R, so I took 60% partials once we reach 10R. So that secured me 6R for the trade, and also, you know, it just makes sure that I get paid out of this trade once it's gone 10R. And then what I had marked on the chart was this area of supply here, and I was also aware of this area. Now for me, you know, I was in a small drawdown for the week before this trade because I'd had a couple near misses and a couple that retraced back on me after being in profit. So I was happy to just keep securing profits. On the way up, what I did, I secured 10% at a time, and I just kept securing profits as it went up until eventually, whilst price was in this area here, that's when I closed out 95% of the position. And then in the end, you know, if I would have left the position, it did end up peaking off for 120 pips, and that would have been a 40R trade. But for me personally, I got about 15R out of the trade because I did take 60% there, and then 40% was taken at, what's this, 22R. So the other 40% was taken around there, and part of that was taken between them points. So that's the trade that I got yesterday. I did just want to share this with you guys. I know I've not done a trade breakdown in a while, but if you guys enjoy the trade breakdowns, then let me know, and I'll start doing them again. But I hope you guys could follow what I've actually done with this trade. What it does come down to is once we'd have this move here, we hit into this demand zone, and then that basically set us off with the bullish structure. And then it was literally just a case of following bullish structure on the 1 minute. That's what gave us this whole idea in the first place to buy from there. And then this was just a case of entering after the mitigation of this order block took place. And then what's happened is price has just continued on the high time frame, and that's why it's turned into such a high risk to reward trade. So guys, for me, I got about 15R out of this trade. I was super happy with the trade, and that is my euro dollar buy from the 19th of May 2022. Alright, cheers guys.